Hello guys, welcome to another episode of CryptoVites. So in this session we'll be talking about the environment of future. So this is a Binance future website. If you are new to future is a they say future is a convenient way to speculate on the price of a financial asset. Like the definition stated, is a way to predict the price for towards the future, the human future. Now, suppose we are in today, so I want to speculate the price for tomorrow, next month, next year, and next century. In fact, provided Binance is still running. So now, there are some things to get to know in before one trade future. So trading future is somewhat similar to trading spot if you have done that before. However, it's kind of different. The tools, some of the tools, and then the principle of future is kind of different. So one major difference that we have in future is that you can use leverage to trade future, while in your spot I don't think you can use leverage to trade. Only if exchanges are allowing such. Now maybe you can get to borrow and then pay back later. Meanwhile in future you can use leverage. Leverage is the multiple of whatever asset you are taking into trade future. Why it will increase your overall asset. Why it increase your overall asset? It allow you to make limited money you make money limited amount of time. At the same time, if the condition is not favoring you, it allows you to lose money rapidly as well. So there are some things that you have to that we do use while trading future. So okay, let me get to login. Now we're back and logged in. So now, once you log in, Binance gets to show you some things about the trading environment. So here, color visionary. Okay, you can get to put all this thing into your own preference, how you want it to be, and then all right. So now, this is the trading environment. We should get to know some things. So first is where you can change your pairs, your trading pairs. Right here, you can see BTC USDT. So it's going to show different assets name, and the contract type is what? Perpetual. So like I said in the previous video, perpetual, you can trade forever, almost forever. Let me say almost forever. And then when you have quarterly, that shows that it's for a limited amount of time. So now you have different ways of trading. You understand? You can use trading bots to trade as well, trading bots to trade as well. And you can see different pairs that we have on Binance, so you can easily select the pair that you want. And then, like we said in the previous video, the most popular pair is BTC. In any exchange, the most popular pair is BTC. So now, another basic instrument is the chart. By now, I believe whoever is watching this video most of you should be able to understand chart, the candlestick, and each candlestick, as we have them here, they represent a given time frame. So you get to put your candlestick to whatever way that suits you, and we can see all this line. There are another technical analysis. So there are technical analysis too. So I think this is a EMA. I think it's I've forgotten something moving average. EMA, yes. I think exponential moving average. And here you get to know the information of the pair you are taking, especially the asset you are taking. Here now, this is BTC. It's showing its ranking. It's number 1. Market dominance 52%. Circulating supply. All of this information are very important. Meanwhile, we are not yet into that. So this is chart, and here these are other tools that you can use. And here that shows time. You can change your candlestick. Like I said, each candlestick represents time frame, so you can change it to 115 minutes, 1 hour, 4 hour, 1 day, and that is it for that. And okay, this is showing original chart. You can change to trading view. Yes, trading view is another chart that you can use, and then there are a lot of options that you can get to use it. Another thing you have to work with is what? Order book. It's very important that you get to know all these things. So order book shows the previous order that had been made by other people. Now you can see this order at this particular price, the size that being bought 3,620 USDT. Now it's changed. It has changed over time, and you can see the remaining orders as well. And this side, as you see, the price is increasing towards us. So these people, they are bearish towards BTC. Some decide to want to sell at this particular price. So this is the number of assets that are staked, and here this is the amount these people want to sell at this time, and this is the amount they have staked. And here as well, that shows these people, they are bullish. They believe the price is going to go up to maybe towards the near future, and this particular group of people want to buy it at 40,675, and others, they believe it's okay to buy it here. So that is it about order book. And for order, we'll be talking much more about how to make use of all this to the success of your trading. And another thing you have to do is what? Leverage option. Maybe it's cross leverage or isolated leverage. So margin mode, it says BTC perpetual margin mode. Yes. So when it's cross margin mode, it says all cross position under the same margin assets share the same asset cross margin balance. In the event of liquidation, your asset full margin balance along with any remaining open position under the asset may be forfeited. So what it meant is that if you are in cross mode, your account in future trading is cross-linked. The moment any asset does not any asset is no longer able to be trading, is no longer does not any asset does no longer qualify for you to does no longer qualify for trading, like maybe your asset that you deposited and then your leverage, the asset is no longer able to sustain the leverage, and the market is no longer unable to sustain. So they get close your order, and then get to take it away. Meanwhile, in isolated, it said manage risk on individual position by restricting amount of margin allocated. So now in isolated, you're going to restrict your allocation. What means by restrict allocation is whatever money that you've put into that particular trade, it will be isolated, it will be limited to that money only. While in cross, it can go to all your future assets and balance everything else. Once your condition to stay in the market is no longer valid, it's going to cut you out and then sell. Yeah, there's this kind of sound it has pop. That's when you receive that notification, then you've lost your money. So now that's cross and then isolated. So what our best advice is what to always isolate your asset. But this is not financial advice. You can decide to do whatever you want, but what I do most is use isolated. And then this is what we call leverage. So leverage, like I said, is the multiple amount of time you want to multiply your money. In a sense, suppose I brought in $100. If I use leverage of 20, that's 20x. That will be $100 times 20. I'll be able to trade $100 times 20. That's $2,000. I'll be able to trade asset worth of what? I'll be able to open position worth $2,000. So if I make my leverage 125 times 100, that will be what? 12,500. So I'll be able to open positions that is greater than what? That is equal to what? 12,500. Meanwhile, this thing leverage is very dangerous. If the more my leverage, the more the tendency of me losing very quickly, and the more the tendency of me gaining very quickly. You understand? So when you leverage, you can leverage, but your collateral can never be leveraged. You understand? Your collateral is your margin mode. Is your margin. So your margin, that $100 that you bought in, can never be increased. You can only increase the leverage, but it functions as money or as assets. It can never increase. You understand? What I mean it can never increase is whatever is happening, it will be equally distributed to the portion. You understand? It will be equally rounded to this 125%. So that means if you are gaining, any slight movement in market, like here now we're having plus 3.57%. 3.57%, that means 3.57% of $12,500. That would be your profit. You understand? And then if it is to the negative, if you are using leverage of 125, you will not get to use 1% before what your assets get liquidated. And when I mean liquidated, your position is closed. You no longer the conditions for you to stay in the market is no longer valid. So that's for leverage. So when your leverage is low, you can put it as low as 1%. When you put it at 1%, that shows that you are using this exact amount that you're supposed to use. And when you use 2%, you are using double of your money. 3%, 3 times your money. So that's what you're using. So that is it about leverage. And this is price. Usually, another something, if you look at that says limit, market, and stop limit. Okay, limit is when you want to set a particular price to buy, and market is when you want to buy at market price. If you look here right now, we have what? $40,748 per BTC. So now I may decide, okay, if I'm using market, I'm buying at this exact price. If I'm using limit, I want to sell my particular price. Maybe I believe the price will go up, or they see a better price to buy this thing instead of this. So that's my limit price. I can set it, and then you can, whatever asset that you deposit into your future, you can slide that whatever percentage of the asset that you want to use. And this is buy long. This is very important, and this is sell short. When you buy long, you believe towards the nearest future the price will increase. One may believe the price will go to 50,000 USDT, so I may buy long, so with little leverage. And if I believe the way BTC is going, it's going to peak down, it's going to be bearish later on, I may decide to sell short. And there's chat room, there's announcement, and there are other things to do as well. So, and that is it for the basic of future trading and the trading environment. And there's calculator as well to calculate your likely profit and everything like that. So there are other technical stuff, but this is just to show you the basic overview of future trading. So in the next time, we'll be taking each aspect one by one, so that you get to know what they deal with, the charts, the order book, how you can use it to your advantage, all these buttons, so that you can make good use of them. How to stop limit, the advanced one, stop limits, and other things like that. And then the technical analysis, how to do technical analysis so that it will favor you while you are trading, and how to choose the right pairs. So thank you guys, and see you in the next video. Thank you.